Mean reversion. Reverting to the mean. So mean reversion is what happens after price pushes away from value, then moves back towards it. So depending on how far price moves beyond value, like a rubber band, price will move back towards value as a pullback or a reversal even. And that's the way that I like to think about it, as like a rubber band. So, and when we talk about reverting to the mean, it doesn't necessarily mean that it reverts back to where it started. It just means that as things get stretched in a certain direction, they have a tendency to bounce back towards value, even if that value, that new value, is higher, as in within a trend, as it continues to stair step, right? So that's the mean reversion would be a trend higher, and then that slight move lower as profits taken. And generally, the more extreme of a move you get in one direction, you get that kind of violent remove in the opposite direction. Maybe just didn't move as far. But I think that everybody should be pretty familiar with this idea once you connect the dots with what you've seen and what you've traded. So we see this happen when we look at the trend in its entirety, where the uptrend line is much lower than the current price and market structure. So we know that prices do not move straight up or down, and they oscillate and stair step higher or lower as the market determines new value during a trend. We know that eventually the trend line will be tested and price will have to reverse from current levels to get there. So eventually price will deviate from the trend, seeking value, potentially break market structure, all while the uptrend can still be intact. So does that make sense? This will help us when we create our game plan. If this sounds like something that falls into the cycle category, I would say that you're onto something. So this is important to comprehend because if we choose to reverse our trade/focus based on mean reversion, we need to know A, where we would want to take profit, and B, how much conviction we should have in our decision to reverse. Or in other words, are we reverting to the mean, or do we think the trend is reversing and now we are in downward price exploration? The answer to those questions will mean two very different things for our trading approach. So this gives us an advantage over other traders who are not paying attention to this, nor know what to look for. Right, so real quick, and I think I'm probably getting ready to go over this, but the idea is that you can't ever just trade in one direction all the time, right? Even if the trend is up and we're trading with the trend, understanding mean reversion, and again, even if it's just the fact that you're like, okay, I understand mean reversion, I understand the fact that we're in a trending environment, the trend is to the upside, but I think that it's overheated and price is starting to reverse. I'm choosing to sit out from trying to take advantage of that price movement back towards value, and I'm just going to sit and wait until I think that I have another good shot to the upside, which is completely fine. Again, that would be the idea of understanding the limits of your weaknesses and choosing not to participate in something that's probably just going to take money out of your pocket, and then therefore choosing to sit on your hands and waiting for the opportunity that makes the most sense, that gives you the greatest opportunity and the greatest return, right? But understanding and respecting this concept is just extremely important, and was a game changer for me. Because every day, especially in the beginning, I would just try to trade with the trend. Like, yeah, okay, the trend's up, right? Doesn't matter where it's at in its cycle. I'm just going to trade. I'm going to go long, right? And oftentimes, as you'll see, it just doesn't work out well. So I've traded training environments where the bulk of the uptrend actually happened overnight, and every day when I went to trade it, price would fall for the majority of the day because the previous push higher was overdone and ready for a break. This is another example of mean reversion. So imagine taking loss after loss trying to get positioned for the uptrend you clearly see is happening. Talk about frustration and disappointment. Knowing where you are in the trend matters. So this is also one of the more lucrative aspects of swing trading, taking advantage of overnight price action and using intraday price action to get better entries for your trades.